It's
Yeah.
crazy that they don't notice that. And gold's up 35, 40%. It outpaces everything. Other than, of course, the bang and that we see in Nvidia and Apple and crypto. It's funny, you look at the Apple stock as an example. The day before it fell 16%. There was an article that said the prior week saw Apple as the largest benefactor of incoming retail buying. So the public jumps on board of Apple. It falls by 16% in the next day. Now, granted, it had a lot to do with the fight between Trump and Musk, but the point of it is that the public, the retail buying right now in the stock market is outpacing anything I've ever seen, at least in a very, very long time. At the same time, the traders, the big traders, are on the sidelines. Look at Buffett sitting on $500 billion in cash. Look at all the insider selling, 7-1 selling to buying. So the public is misdirected by the narrative as the big money, who I think has every vested interest in keeping it quiet and volatile. How many people even look at silver and it's outpaced the S&P dramatically, as has gold? But the volatility, the lack of information, the counterintuitive nature keeps everybody out. And I think people should ask a simple question. Of course, they would never ask it because they don't know to ask it. But who's buying our U.S. treasuries, and what does that mean? The answer, in my mind, is increasingly the U.S. government itself or the Fed. In June, the government came back and bought $10 billion in bonds, and this month, and a couple days before that, when the Fed is supposed to be quantitatively tightening, they came in and bought almost $50 billion in treasuries in 2 and 10 and 30 year. Why? Why does the UK and the Cayman Islands have to be the second and third largest holders, or second and fourth largest holders of our treasury? Do you really believe that the Cayman Islands is buying that much in the way of our treasuries, or Ireland? These countries, many believe, like Jim Willey, that are being funded under the table by the Fed to do this and keeping a peace. Now, that's supposition, but the point of it is that the big money that's been buying our treasuries for all of these years are moving the other way. And, we're doing nothing in the way of austerity. The big, beautiful bill will add almost $3 trillion to the debt. It's continuing. He wants to remove the debt ceiling. This is a game that I think is becoming more and more, I guess you could say, dangerous. At the same time, the public is running into the stock market blindly at a level that we haven't seen in a long time. Now, there's also $6 to $7 trillion, an all-time record to my knowledge, in money markets, just waiting for an opportunity to jump into something. And if we were to see that jump move into just a little bit of it, just a fraction of it, into silver, hey, look, you got about roughly, I would say, $250 billion is the amount of silver that's mined every year. So if you have $6 trillion in money markets, just a fraction of that goes into silver. Bang, you're talking, price would go to the moon and demand would outpace supply in a matter of moments. And that's something that I would expect to happen as we see things begin to unfold, and we'll see how the metals continue. Look, most of us in this industry are accustomed to seeing the price get whacked and come right back down. So we'll see what happens. But I will say, at least in terms of gold, it has shown incredible resilience in the face of, several corrections, but yet it continues to move higher and to stay above. There's tremendous buying underneath the 200-day moving average. And I would say we're getting into that zone with silver now too. So you're not too late. I think, look at silver from an asymmetrical standpoint, maybe the best I've ever seen. Low downside, high upside. And here you have the biggest money in the world, central banks, and whoever they are on COMEX who's standing for delivery. They're very sophisticated, very well informed. Largest delivery in the history of the COMEX in the June or the May contract. Understand that that's very, very, very significant. And, I think once that rears its head, all bets are off. So I guess we'll see over the coming months. It's gotten a little better coming out of London. It's been very quiet, mind you. We're not seeing the stories coming out quite the way that we are. But, based upon the volume of deliveries and the lack of metal to in any of the markets, gold, silver, or platinum, to be able to stand up to delivery requests, if they really came in fast, I think is telling. And there will come that rush. What starts out as, trickles, I think would very quickly. See, this is the genius of the BRICS nations is that, and I believe, and now perhaps the West is doing the same thing. If you go all in and rip the Band-Aid off, you break the system. They've been going just fast enough to allow for as much delivery as possible without the system breaking. And that's what I think there is a realization here in the West that has been happening. So it's not broken yet, but we're seeing the cracks. T+8 weeks is a good example. We're beginning to see the cracks also in the volume of deliveries, and that goes now into platinum and into silver, which are increasing. So we will see. The next couple of months will be very telling. But all it takes is one event, whatever that one event is, I think, to very quickly change the narrative. These exchanges will do all they can to keep their survival. But, no, it's not supposed to be T+8 weeks to begin with. That's a default, in my opinion. And although it isn't back to T+3 days, I'm not exactly sure what it is, but I do know it's a little bit better. Doesn't matter. Nothing has been done to fix the inherent problem, and they're continuing to allow these kinds of trades. It's interesting if you look at the number of regulators that have left the CFTC, the Commodity Futures Trading Commission. I think there's only one regulator left out of like 5 or 6. The rest of them all resigned just over the last several days and weeks. It's interesting. Like, is there something brewing that these people, are moving away from? So I guess we'll see, Danny, but I would say that where there's smoke, there's fire. And the fact that we've even gotten this far, and the fact that we're seeing all these deliveries should let people or have people keep their eye on that, because the people standing for delivery are a different level of sophistication. These are not you and me and mom and pa. These are big sophisticated traders who have, millions and millions and millions or billions of dollars. In the case of JP Morgan, delivering $4+ billion for a customer of gold in March. Who's got that money to deliver that to COMEX? Well, these are the sophisticated players getting their metal ahead of the rush. So no, I don't know. We'll see. It's a good question, but I don't have the exact answer just to say it's getting a little better, or we'd be hearing all about it. Well, I think India has. They just haven't announced it. They've imported more silver than anyone, between 800 and 900 million ounces over the last 5 years. Russia did do that. China, the second largest producer, flying all around the world and buying it up. And it goes back to what we were saying before about the red herring. Why would they ever say it if they didn't want to? Now, I think Russia kind of said it maybe because they understand the compromised position that the West is in London and in the UK. And you notice they said it, and then all of a sudden you start to see delivery problems, kind of awakening the world. I think that silver is a strategic metal. That's why it's not industrial; it's strategic. And I think there's a realization. And are we doing it? Well, I don't know. We saw the largest delivery in the history of the COMEX market here in May. So, and that follows other very large deliveries we've seen come in since November. So I think the realization that this is far more important than just something that is used for solar panels and electronics is taking shape. So yeah, I do think there will be a rush to it. We haven't seen another government formally announce it, but by their actions, India and China certainly find it very relevant, and someone here in the United States is doing the same thing. So I wouldn't be surprised to see greater clarity on it before it's all said and done. But those countries that are wise to what's happening, I'm sure, are doing all they can to accumulate it quietly. What got me interested, Danny, in the BRICS originally was the development of the Belt Road, which is 75% of human population, 50% of global GDP as it is. These are underdeveloped countries in Africa, in South America, and parts of Asia, a little bit of Europe. These are countries that are resource rich, either have strategic shipping lanes on land or on sea, but largely are very countries that are underdeveloped and resource rich. So they come in and they build the roads and the bridges and the maritime channels and the gold and silver mines, the oil refineries. They let these countries bring their natural resources to market, give them the means to do so, and to develop their country and to enrich them. They get a piece of it. And the more I dug into it, I started seeing groups like the Shanghai Cooperation Organization and the Eurasian Economic Union. These are countries that are largely either in BRICS or closely tied to BRICS because of their affiliation. The president of Belarus said those two organizations, the SCO and the Eurasian Economic Union, need to join BRICS anyway. A lot of them are already in it, Iran, Russia, China. But these countries are all, you put them all together, you're talking 90% of human population. So Belt Road, 75% of human population. The Shanghai Cooperation and the Eurasian Economic Union, they are 90% of the world's population. They're three of the four largest nuclear arsenals. They're the majority of resource production in commodities. Every form of commodity, from base metals to rare earths, they have the engine of manufacturing with China and the other countries in Southeast Asia. So keep all of this in mind. So, we've seen recently something called the Chiang Mai Initiative, which is a strategic regional unity kind of thing where countries that used to be adversaries like China, Japan, South Korea have jointly committed to reducing dollar dependence. Okay, all of this stuff is happening. They've come out and actually said that. But then you get about 3-4 weeks ago, the People's Bank of China came out and made an announcement. They said, we've connected the digital RMB cross-border settlement system to 10 Asian and 6 Middle Eastern nations. Those Asian countries are those in Southeast Asia. And that represents right now 38% of global trade. This is the digital RMB cross-border settlement system. It's mBridge. They just gave it a different name. Now, this settlement system takes 7 seconds to clear, whereas SWIFT takes 3 to 5 days. So this is the mBridge where you trade your central bank digital currencies cross-border with one another. And in 7 seconds, it settles with a 98% reduction in fees and versus 3 to 5 days